Thanks for joining me. It's Wednesday, the 27th of March. This is a trade sheet I produce every day for my subscribers. We've got the market on the left side, the buy levels, the sell levels. Each trade has a stop loss level. Obviously, we have to limit our losses and then targets for profit taking. So for gold, I have a buy level at 2168.63. I've had this level for about a week now, and it has worked really well. May Crude, I've got a buy level at 81.40, 81.10. And then we have a much stronger level at $79.80 down to $79.40. I think you can see I've isolated the move up the bull trend from the beginning of December through to the end of March. And the Fibonacci levels tie in really nicely. We've got 23.6% fib at $79.75. This is the 4-hour chart. This combines with the previous swing high at the beginning of March. And we've got the 100 period moving average for the 4-hour chart there around 79.80. We've also got a trend line going back to the beginning of February around 79.30. So that whole sort of 79.80, 79.30 area should be a strong support. We've got the 200 period moving average a little bit below at 78.50. Certainly if we broke below 78.50, that would be a negative. But I've got my stop loss at 78.80. That's enough room. We start breaking below the trend line and I want to be out of that trade. So that's why I've chosen that trade in oil. We're heading into oversold territory on the 4-hour chart as well. And because we're in a bull trend, that also gives me a further reason to be looking to get into a long position if we are oversold in a bull trend. I'm going to jump to the euro yen now. I've got a couple of buy levels in here. The first one around the 163.60 area and the other one is about 100 pips lower at around the 162.60 area. Why have I got those levels? Well, I've got the 163.60 area here. We've got a 23.6% fib when you take the move from the February low. I've got the whole move here from December. Taking the fib levels from that swing low to that swing high, you can see we've got these values down here on the left side. 162.49, 160.72. Then I take a second set of fibs from the swing low around the 61.8% fib. That often gives me a really good breakdown of further shorter term fib levels. So this second set of fibs here gives me a support around 163.60. That coincides quite nicely with this little swing high area at the end of February and the beginning of March. 50 period moving average on the 4-hour chart as well. The last time we swung down there, it did actually work. And I think it could work again for the euro versus the yen. It's not the strongest level, but I'm happy to try a long position in the bull trend there. The strongest level for me is definitely down at the 162.60, 162.40 area. We've got the 100 and the 200 moving averages on the 4-hour chart. We've got a confluence of Fibonacci levels. So I think this really is the best buying opportunity. If indeed we do get down to this level, we should also be oversold on the slow stochastic on the 4-hour chart, which would give me an extra reason to be looking to buy into this bull trend. I've also got a buy level in the Canadian dollar versus the Japanese yen, and this is a very similar reason. We've got moving averages, confluence of fib levels, and we do have previous swing highs from the end of January and the beginning of February. This should be a good level from my spreadsheet. Now do bear in mind that all of these trades are yen selling. I'm looking to buy different currencies versus the yen. Because we're in a bull trend, obviously I don't suggest that you do all of those trades, certainly not the normal full risk on each of those trades. If you were going to execute 3 short yen trades and you normally risk 1% on a trade, then obviously I would suggest you break that up and do maybe 1/3% on each trade. But the reason I will put all of those trades on the sheet is because, of course, not all of the levels may get hit. So if you've got resting orders in your account, you may find only 1 or 2 of those levels are even reached. The trades without color on them are trades that I've had from previous days, so my subscribers may already have these orders in their order book overnight. A new trade for today is entered in yellow, just to make my subscribers aware that they need to perhaps put this order in their account. I've got the pound versus the New Zealand dollar buy around the 209.20 area. Why have I got that? It's a different reason to the trades that I've already shown you. We've got to break above this consolidation area. This trend line does show where the resistance was previously, so I'm suggesting that that should be a good support level. We've actually already had a retest, but we do seem to be trading in a sideways consolidation after the breakout. I think we should eventually continue higher. It's worth having a gamble on that. So if we do pull back to the support area, which is around the 209.30, 209.10 area from the trend line, the short term 23.6% fib and even the 100 period moving average again on the 4-hour chart. This would be a really good support level. The last trade I'm going to show you today is the Emini S&P. I do like to trade the US indices as well. I've got a buy level around 52.40, and I'm going to show you why. All I've done is take the swing low for the June contract down here at 47.54. We've had an incredible run up in the US stock market since October. I've just isolated this last area here. I've got support around 52.45, 52.35. We've got the trend line which starts in the middle of January at 52.45, and this trend line is around 52.35. It also coincides with the 100 period moving average on the 4-hour chart, which is around the 52.30 area. But by the time we get there, that will have risen to around 52.35. That should really be a good support zone. However, if we do break down, we've really got very good support around 51.90, 51.80 as well. Buying the dip really has worked, obviously, extremely well since October. Okay, thanks for watching. If you enjoyed that video, please do like, share, and subscribe. And check the description box below for links to my free 5-day challenge and my free Telegram group, where I do post analysis on most days.